All right, so let's dive right in. Imagine waking up Monday, checking your phone, and bam, the election results are in. Republicans took it all. The presidency, the House, even the Senate.
Wow.
The market's going crazy, and we're right here on the floor of the New York Stock Exchange.
Yeah.
With Tai Wong from Glow Money Talk to break it all down.
It's electric here. You can practically feel the uncertainty in the air. Everyone's trying to figure out what this means for their portfolios.
Absolutely. I mean, some of those races were so close, like Pennsylvania. It was
Oh, yeah.
like watching a political thriller unfold.
Absolutely. That nail-biter finish just shows how divided the country really is. And that's going to be a key thing,
Yeah.
as investors try to predict, how a unified Republican government will impact things like inflation, interest rates, even global trade.
And speaking of NMIG, there's this mysterious figure named Susie Wild who's suddenly in the spotlight.
Right?
She was instrumental in Trump's campaign, and now she's been appointed chief of staff, the first woman ever to hold that position. So what's the deal with her?
Well, that's the million-dollar question, right? Susie Wild is a bit of an enigma. She's got a reputation for being incredibly effective, but operates behind the scenes almost like a secret weapon,
Right.
And now she's running the White House.
So what kind of impact will she have on policy? How will she shape Trump's agenda?
Well, these are the questions that everybody's asked.
I mean, it makes you wonder, why stay under the radar for so long? Was it strategic? Did she prefer to wield influence from the shadows?
It's a very interesting approach to power, almost as if she's playing a long game.
Right.
Carefully building influence and waiting for just the right moment to step into the limelight.
Yeah.
And now here she is at the very center of American politics. It's fascinating.
And let's not forget about the cabinet positions. Who will snag those coveted spots?
Right.
Especially the Treasury Secretary. We've got Howard Lutnick, Bill Hagerty, and even Scott Bessent.
Oh, wow.
A hedge fund hotshot who used to work for George Soros, no less.
Yeah.
All vying for the position.
Each contender brings their own unique perspective and experience to the table.
Yeah.
Lutnick, with his background in finance, Hagerty's diplomatic connections, and Bessent's deep understanding of global markets. It's a tough call.
And then there's John Paulson, a legend in the hedge fund world.
Yeah.
Known for his bold bets. Imagine the conversations those four would have around the cabinet table.
It would certainly be a lively mix of personalities and perspectives, for sure.
But remember, Trump reportedly has a preference for good-looking people.
Oh, really?
Could that play a role in his decision? And if so, what does that say about his priorities when it comes to economic policy?
That's a great question. It's like he's casting a movie, not assembling a team of economic advisors.
Yeah, I mean, Bessent's no slouch in the looks department, so maybe he's got an edge there. But looks aside, his market expertise would be invaluable in navigating this landscape.
Right.
Speaking of which, the SEC and CFTC are likely facing a major shakeup too.
Right. We can't forget about those regulatory bodies. The SEC, or the Securities and Exchange Commission, oversees the stock market, while the CFTC, or Commodity Futures Trading Commission, keeps an eye on futures and options markets. Both are crucial for maintaining fair and orderly markets.
And the current SEC chair, Gary Gensler, hasn't exactly been winning popularity contests, especially in the crypto world.
Oh, really?
Some folks say he's been a bit too heavy-handed with regulations.
Oh, I see. There's definitely been some tension there. Gensler's known for his tough stance on crypto, an enforcement-first approach. It's like he's in a constant game of catch-up with the fast-evolving world of digital assets.
And with a Republican-controlled government, we could see a more lenient approach to regulation, which might explain why Bitcoin's gone on a tear since the election results were announced.
Wow. Bitcoin's up almost 90% in just a few days. That kind of surge is definitely a sign that the market's anticipating a more crypto-friendly environment under the new administration.
It's like they're saying, buckle up, crypto's about to take off.
Well, maybe not quite that dramatic, but there's definitely a sense of optimism in the crypto community right now.
But gold, on the other hand, seems to be telling a different story. It hasn't rallied as much as people expected, even with predictions of higher deficits and inflation under Trump. And if you look at the year-to-date chart, there's a noticeable drop and a technical breakdown, even though it's still up a whopping 27% overall.
Right. Gold's recent performance has been a bit of a head-scratcher. For those not familiar with technical analysis, a technical breakdown basically means that the price has fallen below a key support level.
Okay.
Kind of like a floor that was holding it up.
Right.
When that happens, it often signals that further declines are likely.
So is gold losing its luster as a safe haven asset?
I don't think so. Gold has a long history of holding its value, especially in times of uncertainty. But right now, it seems like the market's taking a wait-and-see approach.
Maybe they're holding their breath to see what Trump's policies will actually look like once he takes office.
That's possible. Remember, the market is always forward-looking, trying to anticipate what's next.
Right.
Right now, there are a lot of unknowns, and that's making investors hesitant to jump all in on gold.
So what factors are influencing gold demand right now besides this post-election uncertainty?
Well, central bank buying is a big one. Historically, central banks have been major buyers of gold, especially as a way to diversify their reserves. But lately, we haven't seen much activity from China, which is typically a major player in the gold market.
Do you think they're waiting to see how things play out with the new administration before making any big moves?
It's possible China is known for its very strategic approach to global markets, and they're probably assessing the potential impact of Trump's policies before committing significant resources to gold.
It's like they're playing a high-stakes game of poker, carefully watching their opponents' moves before placing their bets.
Exactly. And then there's retail demand, particularly in key markets like China and India, where gold is a traditional gift during the holiday season.
You know, it's fascinating how even something like retail gold sales at Costco can give us insights into consumer sentiment.
It's true. If everyday Americans are buying gold at Costco, it suggests a certain level of concern about the economy or the future in general. It's like a real-time barometer of public sentiment.
And speaking of barometers, let's check in with the Fed. They just cut interest rates by 25 basis points, as everyone expected. But what really caught my attention was Powell's masterful handling of those politically charged questions at the press conference.
Oh, yeah. He was incredibly poised, wasn't he? That one word no, when asked if he'd resign if Trump asked him to, was powerful.
It was like a mic drop moment.
Exactly. And then there were all those subtle ways he emphasized the Fed's independence from political influence.
Right.
He managed to reassure the markets without directly contradicting the new administration.
He walked that tightrope beautifully, but here's a question that's been keeping me up at night. What if Trump's policies lead to stagflation, that dreaded combination of high inflation and high unemployment? How would the Fed even respond to that?
That's the billion-dollar question, and it's a scenario that could really put the Fed's independence to the test.
Because their usual tools for fighting inflation, like raising interest rates, could actually worsen unemployment in a stagflation situation.
Exactly. It's a real conundrum and one that economists have been debating for decades. There's no easy answer, and it's something the Fed will need to navigate very carefully if we find ourselves in that situation. But speaking of tricky situations, let's shift our focus to China for a moment. They just announced a stimulus package, but it was underwhelming, to say the least.
It was like they ordered a giant feast and got served a single breadstick.
I know, right? The market's reaction was pretty telling. Copper prices, which are often seen as a gauge of global economic health, took a nosedive.
Yeah.
It's like the market saying, come on, China, is that all you got?
Do you think they're holding back on purpose, waiting to see what deals they can strike with the new administration before committing more resources?
It's possible China is a master of strategic maneuvering, and they're probably assessing their options very carefully right now. They might be waiting to see how trade negotiations play out or what Trump's overall approach to China will be before they show their hand.
It's a high-stakes game of chess, and both sides are trying to outmaneuver each other. But I have to wonder, did China do their homework on Trump's art of the deal? Maybe they should feed that book into one of those new AI chatbots, you know, the one everyone's talking about, Notebook LM, and see what insights it spits out.
That's an intriguing thought. Imagine getting a crash course in Trump's negotiating style from an AI.
Right.
It would be fascinating to see what kind of analysis it would come up with.
It could be like having a secret weapon in these trade negotiations, but in all seriousness, this new dynamic between the U.S. and China is one of the biggest wild cards in the global economy right now.
Absolutely.
And how it plays out will have major implications for everything from trade and investment to currency markets and geopolitical stability.
It's a complex and multifaceted relationship, and it's one that we'll be watching very closely in the coming months and years. But for now, I think it's safe to say that we're in for a wild ride.
Buckle up, everyone. This is just the beginning. It really feels like we're on the edge of a new era, and with all these power shifts and potential shakeups, it's hard to predict exactly where things are headed.
That's what makes it so exciting. This is a moment where anything could happen. And for investors, that means both risk and opportunity.
Absolutely. So let's talk about opportunities. We already touched on Bitcoin's incredible rally, but how sustainable is that? Is this a sign of a broader crypto boom or just a short-term reaction to the election results?
It's definitely worth exploring further. Remember how we discussed the potential for a more relaxed regulatory environment under the new administration? That could be a major catalyst for crypto adoption.
Especially considering how frustrated some folks in the crypto world have been with Gensler's approach at the SEC. It's like they've been stuck in a bureaucratic maze, and now there's a glimmer of hope that the path might clear up a bit.
It is a bit like the Wild West out there in crypto land, and some investors are eager for a sheriff who's a little less strict. But even with a more lenient approach, regulation is still crucial for protecting investors and ensuring the long-term stability of the market.
Right. It's all about finding that balance. But let's not forget about gold. We talked about how it hasn't surged as much as expected post-election. But does that mean it's time to count it out?
Not so fast. Gold has been a store of value for centuries, and it's weathered countless storms. It's not going to disappear overnight.
It's like that reliable old friend who's always there for you, even when times get tough.
Exactly. And while gold might not be making headlines right now, It's still up a respectable 27% year-to-date. That's nothing to sneeze at.
Plus, there are other factors at play that could influence gold demand in the coming months, like holiday season buying in China and India. Those are huge markets for gold, and those cultural traditions could really drive up prices.
It is fascinating how those traditions tie into the global gold market, isn't it? It's a reminder that we're all interconnected, even in the financial world.
Speaking of connections, let's go back to the Fed for a moment. Powell's handling of those politically charged questions was impressive, wouldn't you say?
Absolutely. He navigated that minefield with grace and skill. It's like he took a masterclass in diplomacy and aced the exam.
And his message was clear. The Fed is focused on economic stability, not political maneuvering. They're in it for the long haul.
Which is exactly what the markets needed to hear right now. Uncertainty breeds volatility, and Powell's calm demeanor helped to soothe some of those anxieties.
It's like he's the steady captain steering the ship through choppy waters. But let's play devil's advocate for a moment. What if things get really rough? What if Trump's policies lead us down the path of stagflation?
That's a scary thought, and one that we can't completely dismiss. Stagflation is a tricky beast to tame, and it could really tie the Fed's hands.
Because their traditional tools, like raising interest rates, could backfire in a stagflationary environment, making things even worse.
Exactly. It's a delicate balancing act, and one that would require a lot of creativity and ingenuity from the Fed.
And speaking of tricky situations, let's circle back to China. We talked about their underwhelming stimulus package, but what's the bigger picture here? What are their long-term goals, and how does this new political landscape in the U.S. affect their strategy?
China's playing a long game, that's for sure. They're focused on becoming the world's leading economic power, and they're willing to be patient and strategic to achieve that goal.
It's like they're playing a game of Go, carefully planning their moves years in advance.
And they're not afraid to adapt their tactics based on the changing global landscape. They might be holding back on stimulus now, but that doesn't mean they're not making other moves behind the scenes.
Perhaps they're investing heavily in research and development or strengthening their relationships with other countries. It's all part of their grand plan.
Exactly. They're thinking long-term, and they're not going to let short-term fluctuations deter them from their ultimate goal.
Which brings us back to the idea of opportunities. Amidst all this uncertainty, where do you see the most potential for investors?
That's the million-dollar question. I think the key is to look for areas where disruption is happening, where innovation is driving change.
So sectors like technology, renewable energy, and maybe even biotech.
Those are all promising areas, but remember, with any investment, there's risk involved. It's crucial to do your research, understand the market dynamics, and don't be afraid to seek advice from experts.
It's like that old saying, don't invest in something you don't understand. But don't let fear paralyze you either. Sometimes the biggest rewards come from taking calculated risks.
Absolutely. Investing is about balancing risk and reward and finding opportunities that align with your individual goals and risk tolerance.
And speaking of opportunities, remember how we talked about central bank buying being a major driver of gold demand? Well, it's not just central banks that are piling into gold. Retail investors are getting in on the action too.
That's right. We're seeing increased demand for gold bars, coins, and even gold-backed ETFs. It's like people are rediscovering the allure of this ancient asset.
Maybe it's that sense of security, that feeling of holding something tangible in a world that's increasingly digital. Gold has this timeless quality that transcends market fluctuations and political upheavals.
It's a reminder that some things never go out of style. And in a world where uncertainty reigns supreme, gold offers a certain level of comfort and stability.
But let's be real, gold isn't exactly known for its high returns. So what's the appeal for investors?
It's about diversification. Gold is often seen as a hedge against inflation and a safe haven asset. It's like an insurance policy for your portfolio. It might not make you rich overnight, but it can help to protect your wealth during turbulent times.
And in today's world, who wouldn't want a little extra insurance? Speaking of protection, let's shift gears back to the regulatory landscape. We talked about potential shakeups at the SEC and CFTC, but what specific changes might we see, and how could those impact different sectors?
That's a great question. The direction those agencies take under the new administration will have a significant impact on the financial markets. For example, if the SEC takes a more hands-off approach to crypto regulation, we could see a surge of innovation and investment in that sector.
It would be like opening the floodgates for crypto startups and entrepreneurs.
Exactly. But on the flip side, less regulation could also lead to increased risk and volatility in the crypto market. It's a double-edged sword.
So it's all about weighing the potential benefits against the potential risks, and that's where informed decision-making comes in.
Absolutely. Investors need to stay informed about potential regulatory changes and adjust their strategies accordingly.
And remember, knowledge is power, especially in a world that's constantly changing. But let's not get bogged down in the details. What's the overall takeaway for our listeners? What are the key trends and insights they should be thinking about as they navigate this new economic landscape?
I think the most important thing is to stay flexible and adaptable. The world is changing at an unprecedented pace, and the old rules no longer apply. We need to be willing to embrace new ideas, challenge our assumptions, and adjust our strategies accordingly.
It's like surfing a giant wave. You need to be nimble and responsive to stay afloat.
Exactly. And remember, even amidst all the uncertainty, there are always opportunities to be found. It's about keeping your eyes open, doing your research, and being ready to seize the moment.
So it's a time for both caution and optimism, a time for careful planning and bold action, and a time to embrace the adventure of it all.
Couldn't have said it better myself. This is a defining moment in history, and we're all witnessing it unfold in real time.
It feels like we're living in a time of paradoxes. You know, we have these incredible technological advancements, but also just these immense and global challenges.
Yeah.
We have access to more information than ever before,
Okay.
but it feels like it's harder than ever to sift through all the noise and find the truth.
It's a time of great promise and great peril. And for investors, it's a time that demands both caution and courage.
Absolutely. We need to be smart, strategic, and adaptable. But we also need to be willing to take calculated risks and embrace the unknown.
Exactly. It's about finding that balance between, prudence and boldness.
Yeah.
And it's about remembering that investing is not just about maximizing returns. It's also about aligning our investments with our values.
Right.
Contributing to a world that we want to live in.
So let's talk about values-based investing for a moment. What does that mean in practice? How can investors ensure that their money is actually being used to support companies that are making a positive impact on the world?
Well, there are a few different approaches to values-based investing. One approach is to invest in companies that are specifically focused on solving social or environmental problems, such as renewable energy companies, sustainable agriculture companies,
right,
or companies that are working to promote diversity and inclusion.
So it's about putting your money where your mouth is, so to speak.
Exactly. It's about using your investment dollars to support the causes that you care about. Another approach is to screen out companies that engage in practices that you find objectionable, such as companies that pollute the environment, manufacture weapons,
right,
or exploit workers.
So it's about voting with your dollars, even if you're not a shareholder in the company.
Exactly. It's about sending a message to companies that you won't support their business if they engage in practices that you find unethical or harmful.
And there are now a growing number of investment funds and ETFs that are specifically designed for values-based investors.
That's right. These funds make it easier than ever for investors to align their portfolios with their values. They do the research and screening for you so you can invest with confidence, knowing that your money is being used to support companies that are making a positive difference in the world.
So values-based investing is not just a feel-good trend. It's a growing movement that's having a real impact on the corporate world.
Absolutely. Companies are increasingly realizing that they need to pay attention to environmental, social, and governance, ESG factors, if they want to attract investors and remain competitive in the long term.
So it's like sustainability and social responsibility are becoming the new normal in the business world.
Exactly. And that's a trend that I think we can all celebrate.
But let's be realistic. Values-based investing is not without its challenges. Sometimes there's a trade-off between financial returns and social impact.
That's true. It's not always possible to find investments that align perfectly with your values and also generate high returns. But I think it's important to remember that investing is a long game. And in the long run, I believe that companies that are doing good for the world will also be doing good for their investors.
So it's about finding that sweet spot, that balance between doing well and doing good.
Exactly. And I think more and more investors are realizing that it's possible to do both.
And speaking of doing good, let's shift gears for a moment and talk about philanthropy. How does philanthropy fit into the bigger picture of financial well-being and social impact?
Philanthropy is an essential part of a holistic approach to wealth management. It's about using your resources to make a difference in the world, to support causes that you care about,
right,
and to leave a legacy that extends beyond your own lifetime.
It's about giving back to the community, to society, to the world as a whole.
Exactly. And philanthropy can take many forms. It can be as simple as donating to your favorite charity or volunteering your time, or it can be as ambitious as starting your own foundation or funding a major research project.
And there are now a growing number of resources available to help people engage in philanthropy effective way. There are donor-advised funds, charitable trusts, and even philanthropic advisors who can help you develop a strategy that aligns with your values and views.
That's right. Philanthropy is becoming increasingly sophisticated, and there are tools and resources available for everyone, regardless of their level of wealth or experience.
So philanthropy is not just for the ultra-wealthy. It's something that anyone can participate in, and it can be a deeply rewarding experience.
Absolutely. It's about finding what you're passionate about and using your resources to make a positive impact.
And speaking of passion, let's kind of circle back to this idea of investing in what you believe in. We talked about values-based investing, but what about investing in your own passions and interests?
That's a great point. I think it's incredibly important to invest in things that you're excited about, that you believe in, that you're willing to put your time and energy into.
Because when you're passionate about something, you're more likely to be successful, right?
Exactly. Passion is a powerful motivator. It drives us to learn to grow, to take risks, and to persevere even when things get tough. And that's essential in any endeavor, whether it's investing, starting a business, or pursuing a creative passion.
So if you're thinking about investing, don't just focus on the numbers. Think about what you care about, what you're good at, and where you see potential for growth and innovation.
Exactly. Investing is about more than just making money. It's about using your resources to create a life that you love, a world that you want to live in, and a legacy that you're proud of.
And that's a message that I think we can all get behind.
Absolutely. And on that note, I think it's time to wrap up this deep dive. It's been a pleasure exploring these ideas with you.
The pleasure was all ours. And to our listeners, thank you for joining us on this journey of exploration and discovery. We hope you've gained some valuable insights and inspiration along the way.
Remember, the world of finance is constantly evolving. There are always new challenges to face, new opportunities to seize, and new lessons to learn. So stay curious, stay informed, and stay engaged.
And most importantly, never stop believing in the power of your own potential. You have the ability to create the financial future that you desire and to make a positive impact on the world around you. So go out there and make it happen.
Until next time, happy investing.